So, as you guys know, travel stocks took an absolute beating during the pandemic. And even though the world has really opened back up almost entirely now, some of these stocks are still trading near decade lows, which is pretty freaking crazy. So, in today's video, we're going to examine these stocks to see if there's any value worth picking up here as long-term investors now that, again, the world has opened back up and, travel demand is picking up. Now, the way I want to tackle this subject is by first taking a quick look at some different stocks here to see how badly they're still beaten down or if any have recovered. So we'll look at airline stocks, we'll look at cruise lines, and we'll even look at some online booking sites as well, including Airbnb, by the way. Although I will be leaving out hotels just because the video is going to be already too big as it is, and hotels don't really excite me as much as the others, so I will be leaving that out, unfortunately. But after that, we will also take a quick look at the industry to see how much travel has been picking up, see how much it's recovering, and I'll let you know which of these stocks in particular, if any, attract me, which ones are the most attractive to me, and if I plan to buy any given everything that we discussed in the video. So it's going to be a ton of fun. I hope you guys enjoy the video, but let's just go ahead and dive straight into it. All right, now let's start here with airlines first. So when looking at the American market, now I'll zoom in here just so that it's easier to see, but we basically have four companies that control the most market share at over 15% each, and that's American, Delta, Southwest, and United, with Alaska and JetBlue being the only other two stocks here that, or companies I should say, that are above 5% market share each. Now, American was already a pretty poor performing stock going into the pandemic before it fell by even more during the 2020 crash, and while it did have a rebound from that, it kind of proceeded to just fall right back down again and left it near a decade low and down almost 3/4 of its entire value from the top. Now, Delta had better performance overall before crashing in 2020, then seeing a big rebound off of that, and it's been pretty choppy and volatile ever since, but is still down about 30% from the top. Much better performance though than American, and Delta was actually the only airline stock that I've ever owned myself, which I bought right before the pandemic and eventually sold all of my position during that small rebound just to try to recoup some of my losses. Southwest is worse performing though, still trading right near a decade low and down 57% from the top. United is about the same story here with only some minor differences, but Alaska also about the same, down over 60% from the top. And then JetBlue is down even more and over a 70% crash from the top while also trading right near a decade low. So a ton of damage overall for these airline companies, and that makes me pretty interested in taking a closer look at them, but we'll come back to these in just a second because first I want to take a quick look at cruise lines now. And for this market, we'll be using cruisemarketwatch.com. Now, there's really three cruise lines that dominate this market, and those are Carnival with over 37% market share, Royal Caribbean at about 24%, and then Norwegian at 14%. But I also like to include Disney as well, because even though they only have a very small presence of just 4%, they are still technically the fifth largest, and I feel like they really don't get mentioned enough for all of their travel-related revenues, considering not just cruises, but also, resorts and theme parks and everything else they do. So I'll be including them as well. As far as their stocks go, I used to own Carnival myself, but like Delta, I bought it right before the pandemic and then I sold out on the rebound for two main reasons really. Like Delta, I really wanted it for the dividend, which was cut, and then I also just kind of hated how easily travel stocks could get destroyed because of government policies that shut down travel, which we'll also talk a little bit more about in just a second. But either way, Carnival is now down close to 80% from the top and is also trading right near a decade low, while Royal Caribbean has actually seen much better performance, and in my opinion, they did a better job bouncing back from the pandemic a little faster and more efficiently, which ended up lifting the stock up much higher to now trading right near an all-time high, if you can believe that. But Norwegian was more similar to Carnival, losing 70% from the top, and then we have Disney, of course. They have very strong performance, obviously, before the pandemic. Then they did crash a little during the pandemic too, but they quickly recovered off of that thanks to really, I would say, a lot of hype in video streaming that really kind of helped lift them up off of that. But they have now once again crashed because of recent issues within their business. And that has particularly to do with losses from streaming as well as political boycotts and other things like that. So just a lot of things going on with Disney overall. But from the top, it is also down 40% as well. Turning over to lodging, again, I'll be skipping hotels, but when looking at like Airbnb and some of their competitors and online booking and travel apps, things like that, there's really three primary players here, and that would be Airbnb. They're actually the smallest at 17% market share in America, while Expedia is the largest at 39% when you include their subsidiaries in Verbo. I never know how to pronounce that, but I get VRBO or Verbo, and hotels.com. And then Booking is in the second largest at 22% when you include their subsidiaries in Priceline and Kayak. However, that's just the American market. When you expand internationally, it's actually Booking Holdings that easily dominates the market, especially in Europe, where they command over 70% market share versus Expedia at just less than 10%. And overall, they generate over 21 billions of dollars in sales last year, while Expedia and Airbnb did less than 13 billion and 10 billion respectively. So they're way larger. When looking at their stocks though, Booking has been absolutely on fire, still trading right near a record high, while Expedia is actually down over 30% from the top, and Airbnb is down over 20% from the highs that they reached shortly after IPOing a few years ago. With all of that in mind though, let's take a look now at these different markets to see if such large crashes in the stock prices is even warranted, or if there's actually a rebound taking place right now that isn't totally reflected in the stock prices, at least not yet. Well, when looking at airlines here, looking at total passenger enplanements, we had that huge crash in 2020, but then later rebounded very strongly in 2021 and 2022. Now, last year it was still lower than the record high we had in 2019, but considering that we are now at just about the second or third largest in history, I would say that the airline market has almost fully recovered at this point. And if anything, it just kind of leaves a little more room for growth to come in the following years, which I think can easily help boost some of these, more beaten down stock prices that are, still trading right near pandemic levels. When looking at cruise lines though, well, that's even better, as the market has not only recovered, but has actually surpassed the previous pre-pandemic levels to now all-time highs, with the trajectory still going up even further. So that tells me that there was probably, like a lot of pent-up demand for travel and to just kind of get out there in the open seas, go see some islands, go see some cool places and cruises, and that's why we're maybe now seeing some of that backlog kind of roll in. But when looking at lodging, the hotel and resort industry has been a bit weaker, not only crashing in 2020, but it actually sunk even lower in 2021, if you can believe that. And while it did quickly recover from that bottom, last year's numbers were still pretty far away from that 2019 high. However, just like with airlines, I don't really think that this is a big concern here, because last year was still almost tied for the second largest year in history, which is pretty good. And it also leaves a little room for further growth as well. Plus, you have to consider too that hotels and resorts are really being disrupted right now by private rentals like those offered on Airbnb, for example, who, by the way, has actually seen their annual bookings break a new record high last year. In fact, it was a 65% increase from that 2019 extreme that we saw in the other industries. And that's why these booking sites are, I would say, a little more exciting to me. There's a lot more growth there. And that's why I kind of prefer them over hotels. But we'll come back to all of that in just a second. With all of this information in mind, I just want to quickly kind of give you my overall thoughts on some of the stuff that we've seen so far. And then we'll dive into which stocks are my favorite and what I might be looking to pick up here. But just kind of looking at some of these stock charts here, I was like, damn, I can't believe just how much these stocks have fallen, how incredibly low they're still trading today, even though the world has opened back up. Now, granted, many of these companies took heavy damage and are now left with a ton of debt coming off the pandemic, which is a big concern going forward. But I don't think it's very likely for them to go bankrupt, at least not the biggest ones, especially the biggest airlines, which we even saw during the pandemic that the government was willing to bail them out and provide a ton of assistance with taxpayer money. So there is a bit of a too big to fail kind of feeling there. And I also think that these companies operate in high demand markets that are not likely to ever go away. Plus, they have very large barriers to entry as well. Not like it is for hotels, where Airbnb has been eating up a lot of market share every year. Try doing that with airlines or even cruise lines. It's not like just, random people can start buying massive planes and cruise ships to lend out to people. There's a gigantic barrier to entry there because of how much capital is needed to build up those massive fleets of, planes and ships. And again, I really think that travel will always be in high demand. I don't see that market ever going away. Even with the rise of like the metaverse and other stuff, people are still going to want to get out there and physically go and see different places. So I'm not really worried about the market getting any smaller. I only think it's going to get larger over time. And because of that, even though a lot of this crashing might be warranted, I do think that there is some value left here to extract for investors. So let's run through which of these would be my favorite stocks from each group, and I'll let you know if I plan to buy any of these myself. Well, starting with airlines first, here I really want to go with the biggest players with the most market share because I feel that that adds a little bit of safety, a little bit of too big to fail there. And I would also, of course, want them at a reasonable price, but also with some good performance. And I think we definitely have that in some of these names. Now, when looking at the chart here again, I would go with the biggest 4 players here, and then I would just choose the most attractive from that bunch. So when it comes to valuation, I created some charts here for you guys, but Southwest is the only one here with a really high PE ratio, which is also higher than the sector median, but the other 3 are really cheap, with United being the best of them at a whopping 75% discount to the sector. By the way, I'll be using Yahoo Finance and Seeking Alpha for all of this data. But moving on to the percentage away from the average analyst price target, well, United once again looks the most attractive here at potential 48% gains if it were to rise up to the average price target. Delta and American are also really good though at close to 30% gains, while Southwest seems to be the most bearish of the group. When looking at revenue growth, Southwest actually takes the win here, although when looking at next year's estimates, all 4 are pretty much tied, so I wouldn't put too much weight on that. And then when looking at profitability, again, this is probably the most important metric right here because these companies really took on so much debt from the pandemic, so I want these companies to have a high operating cash flow because that tells me that they're going to be better equipped long term to pay off that debt. And when looking at this one here, well, it's United once again that comes out on top, while Delta takes the number 2 spot just slightly behind them, and then American and Southwest are quite a bit far behind at around half of that amount. So United and Delta, much stronger cash flows there. And when adding up some of these figures and assigning points, I did that just to kind of illustrate my overall feelings here. Well, United, of course, came out on top with 16 points, while American and Delta were tied for second at 13 points, and then Southwest came in last at 9, which I do mostly agree with. I think United is clearly the most attractive here of the group at today's prices, and even though American and Delta were tied for second, I would actually give the edge to Delta because of the much higher operating cash flow, which again, I think profitability is just going to be crucial for these companies moving forward. Now, when looking at cruise lines, well, Disney is automatically my favorite of really any travel stock out there, any of the ones that we talked about today, because they're very large and much more diversified than what each of these companies are doing individually. And I get that Disney has a lot of their own, like unique problems right now, but at least it's caused the stock to crash, which otherwise might have not happened. So I'll take that turnaround potential from them. And I've been buying the stock myself this past year on the drop. But as far as the other cruise lines go, well, again, I really like the size and market leadership of Carnival. I think that's going to be important for the future. And I also like their larger free cash flow as a result of that size and dominance. And honestly, for Norwegian to still be posting negative cash flows with all the debts that have been taken on by these companies, it's a pretty big concern for me. And that would almost eliminate them for me. Despite the larger size, though, Carnival is still putting up about the same revenue growth as Royal, with also much higher EPS growth expected next year as well, which did kind of surprise me. And another thing that surprised me is actually their valuation. It's a bit more expensive than I thought it would be because of that big crash that we saw in it. But at least it is still lower than the sector, and analysts do think that both stocks, Carnival and Royal, could see some big gains of around 30% or more in the coming year. So just based on some of those figures right there, I would say Carnival is probably my favorite, but of course still behind Disney. And then as for Booking, Expedia, and Airbnb, well, I can tell you right off the bat that I'm going to prefer the diversification and cheaper valuations of Booking and Expedia over Airbnb, as they not only have a presence in Airbnb's market, but they also cater to hotel bookings and other things too. But I'll include Airbnb in some of my comparisons here just to show you and illustrate some of my points. But we'll do that really quick, and then I'll give you my overall conclusion right after that. Okay, so from the top here, Expedia is the one that is down the most, while Booking is still trading near a record high, talking about stock prices here. So that alone kind of attracts my focus over to Expedia a little more, just in hopes that there's more value there because it is down so much. But again, you have to consider that Booking is just a much better run business overall, not only with close to double the sales, but also much higher cash flows as well. Because of the smaller size though, it does allow Expedia and Airbnb to actually grow at a slightly higher rate, although it's not by much. And EPS growth on average over the next 5 years is also expected to be roughly the same as well. The biggest difference for me, I would feel, is gonna have to be in the valuations, where Airbnb trades significantly higher than the sector on a PEG ratio basis, while Booking is still very good at around 1, which is below the sector despite being a market leader. That's good. And but then Expedia just really takes the cake on it. I mean, they're at less than half the number of Booking and almost 70% cheaper than the sector as well. So that screams like deep value to me. And analysts seem to agree with that, as it would need 21% gains from here to reach the average analyst price target, while Booking would only get 11% gains, and Airbnb would actually need to fall about 10% as well to reach those analyst price targets. And so I think with these, I can best kind of sum it up here as Booking really being the superior company with better performance, more reliability, and still actually a pretty cheap valuation, lower than the sector. So it's probably a good stock for most people to still be investing in long term. Whereas Expedia, I would say, is the smaller, less profitable company, but perhaps more upside potential because of that really cheap valuation. And I think that makes it pretty attractive in its own right. Now, obviously, I didn't do a deep dive into all of these different companies. It would have ended up being like a 3-hour video if I did that. So take everything I've said with a giant grain of salt, please. And as always, make sure you do your own extensive research and make your own investment decisions for whatever fits you best in your investing style and your needs. But if you're asking me for my personal opinion on all of this stuff that we've talked about and whether or not I'll be buying any of these stocks, well, I think in order of how much I like them, I would put Disney at the top, then United Airlines, then Expedia, and then Booking, and then Carnival, maybe Delta after that. But I would draw the line there in terms of what I think are good stocks to buy versus everything else. Everything else I'm not really interested in. Those are the ones that I think are pretty good pickups right now. Now, will I actually buy any of these? Well, I definitely think so. Now, I have obviously, I did get burned during the pandemic, and that left me hesitant to jump back into pure play travel stocks ever since. But when looking at Disney, I know they're not a pure play travel stock, but because of that, I think they offer some protection because of their diversity. So I like that. I think United Airlines is a bit too big to fail, and I also feel that Expedia is a little different in their business and could weather some different storms. So at today's prices, those would be my 3 favorite there to be actually buying. Now, I already own Disney, but I am heavily considering buying some of United Airlines and Expedia as well. I'll probably be buying those in the coming months, especially, if prices stay the same or hopefully go even lower, then I would definitely want to pick some of those up. I'm not 100% decided yet, but I'm pretty close to just kind of pulling the trigger on a couple of those stocks. So anyway, make sure you're subscribed for any future videos that come up, any updates that I give on these stocks. But yeah, those are my overall thoughts. What do you all think? I'd love to hear your thoughts down in the comment section. Do you like any of these stocks? Do you agree with me that, Disney, United, and Expedia are probably, top 3, then maybe followed by like Booking? I think Booking Holdings is still looking really good. Perhaps Delta, Carnival, not looking too shabby either. But I'd love to hear your thoughts. Let me know down in the comment section, and I hope that you enjoyed the video, and if you appreciate all the hard work that goes into these videos, then please consider subscribing and hitting that like button to help support me. If you want to go above and beyond, you can support me also on Patreon. Really means a lot, helps keep this channel alive. So thank you to everyone for all of that. But I hope you're all doing well, and I will catch you in the next video, my friends. All right, take care, everybody. Bye-bye.